Hello, ladies and gentlemen. Welcome to a new episode of the series. I hope you guys are doing great. And that being said, let's dive straight into today's episode. So, what were the trades I took? How did I take them? How was my week performance overall? I hope you guys had a good week. This week, I took two trades. Okay, technically three, but one was missed, and then two were two good trades. So, without wasting any of your time, let's just get into the chart breakdowns. We'll see how I took them and how they played out, the analysis, the before and the after. All right. And before we get into that, also, there's something I want to be introducing to you guys. For those of you who know how to trade, but you're kind of like under capital, especially in Africa, okay, in Africa, like Nigerians to be precise, whereby we have a lot of traders that know how to trade, but they don't really have money to trade. So I launched a program whereby I'm funding traders with the team, okay, by giving traders some certain amount of money in order for them to at least be able to trade live capital. Now, this is not your prop firm things whereby you pay for challenges and then you pay for evaluation fee and all of those stuff. Now, this is real life money. Okay, we are giving out real life money to traders who actually know how to trade. And for you to be able to be eligible to partake in this, you first of all you need to make sure that you know how to trade. Okay, because you join check the link in the description below, and then you join with the link in the description of this video, and then you will see other traders in the WhatsApp community where you see other ones that we have also given some certain amount of capital. The maximum amount of money we can give out for now is $500 per individual. Okay, that's the max that can be given to you. Now, this is real life trading. So, in order for you to qualify, all you need to do is step one, check out the link in the description. Step two, ensure you truly know how to trade, because we are going to question you. I myself, I'm going to question you, and the team, we're also going to question you for you to be able to explain your whole trading plan, the way you trade, how you trade, what you trade, your risk management, your trade management. So basically, this is not just giving out money for free. We are giving out money in order to empower traders that are actually profitable, but under capital, without any string attached. There is no payment. You don't have to pay us anything. It's more of we give you guys money, you trade, you make the money, and then we split it equally among each other. So that being said, let's get straight into today's videos, and then we see the chart breakdown. Also, one more thing, come on, if you are watching this video up to this very moment and you haven't subscribed to this channel, please do me a favor by hitting that like button, hit that subscribe button, and I appreciate you all for always coming back and watching this series. Okay, thank you.
So, my week recap. Like I said, I took 3 trades this week, but 2 actually tapped me in, and then one was a missed. So let's go through my whole trades for the week. This is USD JPY. Alright, so if you look at it, let's look at why I took this trade. This is the 4-hour time frame. Alright, beautiful. So now if you look at this on the 4-hour time frame, what are you seeing? This is a supply zone. This was the last buy before the huge sell, and this became a huge fair value gap. So this huge fair value gap became a strong area of supply, which I already marked, and this is like since August. Okay, so and then we had this low demand zone here. So price came, range, and then tapped into this. Well, I've gone through all those trades, alright. So I just want to take you to this week's on board. We want to see the whole structure of everything so you can understand. So now we can see here that price is still pretty much respecting this supply. Then at this point we had this new supply zone that was formed here. I'm gonna be zooming in. So we tapped into this point, okay, and then we came down, which broke structure to the downward side. So I think that was the recent supply zone that I used for my week's trade. Okay, so now if we look at this, basically we are looking forward to coming back to this demand zone and then get to this supply zone to continue selling. That is the whole analysis, technically and even fundamentally. Okay, so now what happened? This was market open, I think. Yeah, okay, so this was Tuesday. It was Monday. All right. So this was Monday here. What's today's date? Today's date is 13th. This was 8th, because I know price gapped up somewhere. Price gapped up somewhere around here. Where was Monday? Okay, today's Friday, this is Wednesday, Tuesday. Okay, Monday. Yeah. So from Monday to Tuesday, I was looking for price to come here and then I catch these buys. But if you look at it on the 15 minutes time frame, it didn't tap me in. It kind of jumped. It jumped without giving me an entry in my model. So look at this cell here. This cell here. Uh, I'm trying to remember all my trades so that I can be able to explain. So give me some time, please. Okay, so we had this fall. Okay, we had the break of structure to the downward side. This was a fair value gap. This is a fair value gap in between. You see this last week here, and then this is another week. I don't want to remove the risk to reward ratio, but if you look at the space in between these two, don't look at where the cursor is. If I put it, this is what I'm talking about here. Okay, but it's blocking, so I'm shifting it aside. So if you look at this week here to this week here, this is a fair value gap paired together with a break of structure, which shows, okay, this is, we are changing trends to the downward side on UJ. So this became a 4-hour sell order block. So now I'm expecting price to like come back there and then I sell. I'm also expecting price to come down here and then I buy. So enough with the 4-hour time frame. Let's go to the 15 minutes time frame where everything was pretty much done. So you see, so yeah, this is the gap I was talking about exactly, because I know I was looking forward to buying, but price didn't get me in. Okay, so it was, because this was Friday exactly. So Sunday, good. So I was expecting at this point price should come down, to this point. See where it was, right? See, this is where it was. I was expecting price to like come down to this the demand zone here, then give a change of character to the upward side so that I can then buy to this sell zone here, and then probably from there we sell. Okay, but you see what price did? Price didn't come to that zone, and then we just rejected from them in the middle of this point up to the downward side, and then boom, a gap. At this point, this is a change of character. There is nothing for me to catch again, because look at, we have just few space left to get to that supply zone. So that was a missed long for me, not really because I missed it. Based on my own way of trading, I couldn't just catch that whole move. The jump was too much. Yes, this is the gap exactly. This is what I was talking about. So from Friday to Sunday and then Monday, yes, so the market just gap from here, boom, to this point. It wasn't really expected. All right, so back to our 15 minute. Now price tapped into this area of supply, this 4-hour area of supply here. This price tapped into this far area of supply. Now I'm expecting a reaction. Okay, I'm expecting a market structure shift so I can go short. So you can see we came here, came down, came up again, and then came down, taking out this recent low, which became a change of character. At this point, what are you expecting? This area becomes an area of supply. This whole area like this becomes, oh okay, I've taken this trade, that's why this is like, this is for the other one here. This area here like this, area here like this becomes an area of supply. This whole area like this becomes an area of supply, freshly created. So price is expected to come back to that zone and then continue selling downwards. But for whatsoever reason, price didn't come down to tap into this. So I set a limit order. I wasn't being able to get tapped in. You can see price just consolidated, and then sold off, which is very painful, looking at your analysis being right, but you don't just get tapped in. It is what it is. It happens. Some days are like that, and that was a missed trade for me on USD JPY. All right, so now this was the recent one I took on Friday. Okay, at this point I was really pissed with this trade, believe me, because I could have broken even on this trade, and I'm gonna go through it. So now after coming down to this demand zone here, we came down to this demand zone here, and then this was CPI. Okay, so this was CPI. So if you look at this like this I was aiming to take longs. Now that we tapped into that demand zone, this was CPI. You can always tell from the candlestick spikes, this is CPI. So my entry was supposed to be like this, but I didn't take it, and I'll tell you why. Because now your risk to reward ratio on a trade is very important. So this was how the trade would have been. This whole, after we have a change of character to the upper side, this whole area becomes a demand zone. This area becomes a demand zone like this on the 15 minutes. This becomes a demand zone in which price is supposed to, after changing structure, we had break of structure. The market is following one single trend. downwards after tapping this area of supply. It's going downwards, and now we tap into a key level of 4-hour demand. Can you see? This is the rejection here. We tap into a key level of 4-hour demand, and boom, we have that push up, push down, push up again, taking the most previous high. That's a change in market structure. So that's a market structure shift, which in smart money concepts is called chalk, the change of character. So that's what I'm looking forward to having. My chalk needs to be paired together with a higher time frame key level of area or demand. I'm not just looking to trade any single change of character or any single, like that. It has to be paired together with a higher time frame. So looking at this now, this is how the trade will have been, and then where am I selling back? So now this is another very important thing. You want to know where is price going to. Okay, you can't just say you want to trade like this. Okay, this is your risk reward ratio, and then you're taking it to the moon because you want a 3R or you want a 4R or you want a 5R. The market doesn't care about what you want. You need to be able to see the market for what it is, see structure for what it is. So the most sensible thing to do at this point is to have your TP here. This is what I used to say. So that is the sensible way to trade. You have your entry, and then this is where price is going. At what point should you come out? Okay, so knowing how to enter is important, and also knowing how to come out is extremely important as well, or else you just end up losing money because you are always floating in profit, and then you're always losing, floating in profit because you don't just know when to come out. So now if we look at it from this point, you can see that the risk to reward ratio is not sensible. This is a 1.31 risk to reward ratio. Doesn't make any sense to me, so I didn't take this trade. Okay, due to the risk to reward ratio was too small, so it doesn't just make any sense for me. So that was another missed one there. So we have this first miss, you have this one. This is not missed. I purposely didn't take it because the risk to reward ratio was too small. And then now look at this. At this point where price got to, okay, which will have been the take profit of this long here, price got here, and then we had this strong rejection. This is it here. So we had the strong rejection. So now that we had the strong rejection, I'm looking like, okay, and price has still respected this key level of area of supply on the 4-hour. You see, market structure is key. Okay, it's key. You need to understand where price is going. At what point is price going to reverse, so you can position yourself well for trades. Yes, I had a losing week, but I still can explain, every trade I took was by the book. So it happens, but it's not like I can't explain my trade or why I took this. You can't make profit every single week. Okay, but as long as you are profitable overall, maybe at the end of the month or something like that, that's what matters, because your edge will definitely play out if you know what you're doing. So looking at this, let's look at this. This was now a new area of supply on the 15 minutes paired together with the 4-hour. How can I say we had this change of character, break of structure, and then boom, we tapped into this 4-hour level of supply, and then we had the sell-off. The sell-off took out the most previous low, giving us a change in market structure shift, a change of character. At this point, this whole area becomes a new area of supply, valid area of supply that price is supposed to come back into it to then trade lower into this other block here, the 4-hour time frame. So looking at that now, what can we see? I drew this, and then I had my alert set here like this so that I can tell, because on a normal way I can short the position. I can do a short like this. You can do something like this. So if you do something like this, this becomes your entry, the change of character line, and then your stop loss maybe slightly above, a few pips above this, and then your take profit like this. Alright, looking at this, it doesn't make any sense. Again, it doesn't make any sense. Again, this is a 1.18 risk to reward ratio. So I'm not looking for doing I'm looking for taking a 1.1 risk to reward ratio. Some people do, they do, but I don't trade a minimum of 2. If the trade is not at least 2, it doesn't make sense to me. Okay, now look at this. I set my alerts here, waiting for price to come back into the zone, so that if it comes back and I see a reaction, I could take a sales. So now, since this is a 15-minute area of supply, I cannot expect to see a reaction inside that 15 minutes. It will be too late. Now look at this 4-hour area of supply. We are looking for a reaction on the 15 minutes. Okay, that's what we are looking for, a reaction on the 15 minutes. What's wrong with my network? 4-hour time frame here, we see once price taps into that key level, we want to see a reaction on the 15 minutes. So now if this is a 15 minutes and it is too big, what else can you do? The only thing you can do is to go to a lower time frame to look for a reaction. That's how it is. So at that point, I marked this area as a point of interest. Then I was observing how it's going to react on the lower time frame, which is the 3 minutes time frame. As you can see, this was a very clean small stop loss, and then this I was looking to make about 8.48 risk to reward ratio on this trade. Not like because I want the 8.48, it's just simply because that is what market structure is. My TP is still at this key level. Okay, so the thing about trading is, in as much as lower time frames gives you stress, entering very early at the beginning of the move, it could be stressful, especially during the fluctuation of price. But the bottom line is, if you can be very good at your entry, the same trades that are giving you 1 to 1, 1 to 2, 1 to 3 can give you more if you are better at your entry. It's just that the thing is, one thing goes for another. If you are going to those lower time frame, which I have strategies like that. If you check my previous videos where I explain how to trade them, it's just that you're going to have a higher stress level. You're going to have a higher stress level. If you're entering on the 15 minutes, you are more calm. But if you're entering on maybe the 3 minutes, you're entering earlier, so your stress level is going to be more. But trading is all about doing what suits you. Okay, whatever suits you, do it. So now if we come to the 3 minutes time frame here, you see what happened. Let's see what happened here. So now price came into, let's make this big. Price came into this area of supply. Okay, we tapped it in here. At this point, what am I looking for? I'm looking for a change of character, indicating a downward move. So you can see price tapped into this point, and then we were still going higher. So there is no confirmation for me to go short yet, even though I know price should sell off from that zone. Are you feeling? So now we are still breaking structure, and boom, we had a change of character to the downward side. Let me zoom it for you to see. So this was a change of character to the downward side, signifying that okay, we are changing structure to the downward side. At this point, the truth about lower time frames is you can set your limits at this point, and because of spreads or whatsoever, you don't get tapped in. So at this point, I just entered at market execution. When I saw this change of character, I entered. That's why I see my entry is slightly below. Okay, my entry was 147.482. You see it on my MT5. You see the entries for transparency. All right, so I entered here at market price. Stop loss. Where was my stop loss? My stop loss is slightly above, the high that was formed here. You look at it on the 15 minutes time frame. Let's look at it on the 15 minutes time frame. So this was the recent high, this high here. So I added a few pips. To this high here. So you can see I also set my stop loss as strategic points. My stop loss are set as strategic points so that if price goes back to my stop loss, that means the trade is totally invalid. Okay, so I'm not putting my stop loss in places that you can see where my stop loss is slightly above the zone, and you see when price broke through it, it broke structure to the opposite, which means we are changing structure back again. So let's go back to the 3 minutes time frame. We had this change of character downwards, and then boom, immediately there was a sell-off. And now on the 3 minutes time frame, this area becomes a level of supply. See this change of character on the 3 minutes time frame. This is also an area of supply. Alright, this is an area of supply. So an area of supply inside an area of supply. So we had the 4-hour area of supply, 15 minutes area of supply, and now a 3 minutes area of supply, all paired together in the same zone. Okay, so now price came, as I entered, price sold off. Okay, I was looking forward to taking partial at 2R. This is 2R here. So if price had gotten to this point, I took 2R. I'm going to take 1 hour of the table, which is 50% of my profit, and then move my stop loss to break even and let the rest run. Okay, at that point I've taken money out, the trade is risk free. And then we can see price came down here, which is normal, and then we pushed back up, absolutely normal, going back to fill in this area of supply. And as you can see, as we filled it in, we came down again, we broke structure to the downward side. At this point I was so confident in the trade that okay, this is very clean. Okay, and as you can see, we came down, my god, very close to my 2 hour, very close to my 2 hour. And what did we see? A strong reversal to the upward side, came down, pushed up, took me out. So I was really pained on the trade. I was really look at this. How many pips? All right, so that was how at this point I wasn't even looking forward to taking any trade again, because I wasn't looking forward to taking any trade. This week for me was, you come to the market, you follow your rules, you do everything, but the market still cooks you. Right, the market still cooks you. Doesn't mean one is not profitable, but it's just the way it is. I'm sure a lot of people hit stop loss on this trade. There's a couple of my friends also took a loss on this trade. Okay, not like I dropped signals, but like based on their own analysis and all, you can see price coming back, tapping this area of supply, coming down, respecting it, breaking structure to the downward side. And this is like we'll call this a trend line liquidity build up that price was supposed to clear. Okay, price was supposed to clear. Even if there was any sharp reversal, it could have been at this point here, something like this, after breaking this. Okay, clearing that. But it is what it is. You can do everything in the market, right, and then you still don't make money from the market. Okay, so now let's move to GBP JPY trade that I took this week. Okay, beautiful. Okay, so this is another terrible one. Another terrible one, I tell you. GBP, I know a lot of people wanted to sell GBP this week. A lot of people wanted to sell it, but still it's just holding up to the upside, refusing to come down. Okay, so let's look at this. Boom, let's look at this. So this was an area of supply. You can already start to see that my trades are similar. Okay, it's not, you can already see that my trades are similar. You can see that it's the same thing over and over and over. If I used to say this thing, if your trades don't look the same, okay, you don't know what you're doing. If your trades don't look the same, you don't know what you're doing. I'm sorry, that is the truth. So you can see after tapping into a key level of 4 hours, I removed it, but you're going to see it on the 4-hour time frame. So this is it on the 4-hour time frame. Okay, this was an area of supply. This whole last buy candlestick before the sell-off. This last buy candlestick before the sell-off. This whole like this whole place was an area of supply. It was bigger than this. I removed it because it already broke it. Okay, the area of supply was something like this. Yeah, something like this. From this whole point here, like this down. We've been respecting this area. Look at it. If I stretch it to the back on the 4-hour time frame, so we've been respecting this area of supply. You can see it now. Okay, we've been respecting it, and now price came to this point, tapped into it, and then look at this huge rejection. This was a huge rejection. And what happens if you look at one candlestick, especially on the higher time frame, you're able to go to the lower time frame and see what happens. Just this candlestick alone, just this 4-hour candlestick alone, it was signifying a change in market structure. Look at this. We had this push up, push down, push up, and then push down. That gave us a change of character after tapping into this area. So now at this point, I set my limit order here, my take profits, which is going to be the most recent order block here. Not even this order block. This order block formed just recently. It was this order block formed after we broke structure, after hitting me out, we broke structure. So now you see that my trades stop losses are always strategic. You see, after it hits my SL, what do we see? We have a break of structure to the upward side, which means it's no longer valid. Enough with the yapping. I think I explained that already. So you can see I entered with my limit order here. It tapped me in. Price opened, we gapped down. Okay, we gapped down Sunday, early hours, late hours of Sunday stroke Monday Asian session. We gapped down here, and then okay, with this gap down, I was like, okay, let's see what happens. Price came back to the entry, came down like that, like that. It was just building up. This trade was a trade I held for a very long time, not longer than I should have. I had my stop loss in place, and as you can see, we just went and then hit my stop loss on GBP USD. So you can do everything right in the markets, and this whole week for me wasn't just it. Despite following the whole plan and all, market structure was just holding up. So at this point I was like, okay, let's rest after my last sales on USD JPY. But had it been, the truth is, had it been my other USD JPY trade that missed me, had tapped me, I'll have closed this week on a break even. But it didn't tap me. It's fine. We come next week again, we execute, and we still follow the rules. Stay disciplined, stay consistent. We don't over risk. We follow the rules. We risk 2% on every trade. Okay, there is no trade that you say this is an A plus setup, let me risk 20% of my account on one trade, 10% of my account on one trade, because you never know what will happen. Alright, so that being said, let's look at my outlook for next week. Let's clear this. Finally, I can get to clear this risk to reward ratios. Trust me, I don't like keeping risk to reward ratios on my chart. I hate it. It's just because of this challenge. Once the trade is done, I journal the trade, it is over. I see no reason why I should be keeping that risk to reward ratio on my chart. It just makes everything messy. Alright, so for now, what am I looking forward to doing on GBP USD? Honestly, I'm just waiting for price to come, because now I don't understand. There is no area of supply anymore. We've broken everything. Honestly, I'm just waiting for price to maybe come down to this demand zone, or this fair value gap might be an inducement. This demand zone, if price comes down something like this, I wouldn't even be looking forward to taking short again. If price comes down to this demand zone and then I have a change in market structure on the 15 minutes time frame, then I can continue it higher like this, to wherever recent supply zone that might have been formed while price was falling down. So that's it for now. I don't have anything on GBP USD for now. Yeah, then let's look at the euro also. The euro, I would have taken longs on the euro, but it didn't tap me in. This was CPI. I don't want to go to lower time frame to explain too deep. It's just literally the same thing. On the low, it didn't tap, it didn't come close to this 4-hour order block before going back up. So now like this, what am I looking forward to? I'm looking forward to, this is an order block here. This is an order block here, but the space between these two is too small, honestly, because this is still an area of supply. This is still a 4-hour key area of supply. So I wouldn't really want price to come into these points and then except we have a new area of supply formed inside here, because if not, the space between it is too small. But I'll still be on the lookout. On euro, I'm looking out to buy in euro. On GBP USD, I'm also looking forward to buying them this coming week. So those two are in line, which makes sense. Then GJ, I'm not really trading GJ. I just use GJ to look at the movement of, you can see there's no analysis here. I'm just using GJ to look at the movement of USD JPY, the same way euro USD and GBP USD move. And then for this, we have the other blocks here. I'm gonna delete this alert. This alert was supposed to trigger when price hits my 2-hour, but it reversed few pips to that. And yeah, we still have this other block valid. Okay, this is also a sell. I just want to, so what am I looking forward to now on USD JPY? Honestly, I just want to see price come to this point first. If price comes to this point, we see how it reacts. Maybe we take some trades. I don't really know. We can't really predict. Trading is not about prediction, it's about reaction. When price gets to key levels, how does it behave? Will we take a trade or not, based on our confluences in our trading strategies? Alright, that's enough explanation on this video. So those were the trades I took for the week, and we came out negative for the week. Less trades, just I took up just two trades. Okay, one on GBP USD, one on USD JPY. The remaining others I could have taken them, but their risk to reward ratio was too small, and another one was missed. So that being said, thanks for watching. I'll catch you guys in the next one. Oh yeah, after this analysis I'm gonna show my MT5 and then my journal for the week, and then you see the overall where the account is seated right now. Okay, thanks. Alright, so these were my trades for the week. We had the sell on GBP USD, lost 2.1%, and then USD JPY. This USD JPY was so freaking annoying because price went to like 1.8 hour in profit, just about 2 hour or 1 hour to hit 2 hours so that I can, break even, take partial, let the rest run, and then only for it to reverse totally on me. So you could see um, the entry, the SL, everything. So that is it, boys. We'll go next week.